Praise God.
Hallelujah.
Perhaps we should start on this note, sir. Uh, what should we be expecting? Because everywhere, even in my company, everywhere, everyone is planning and gearing towards January 1. You know, when we wanted to enter the year 2000, we said year 2000 is when the world will come to an end, and everybody was like, we're anticipating to enter into year 2000. So year 2026, everybody is anticipating and talking about January 1st and its implication. Can you just give us an overview of what is happening in that regard, sir?
Okay, good morning, everybody. Good morning, Senior Pastor, and thank you for having me today. Okay, so what we should be expecting, number one, we should be expecting relief. Okay, so the new tax reform is not targeted for the poor. Okay, so there are a lot of reliefs for individuals and as well as small companies. So the reform is majorly for the rich, and they've made the system to be more progressive. So the more you earn, the more you pay. Okay, so it's not at a proportional level. So that is what we should be expecting about the new tax law. But you know, as Nigerians, we are not peculiar to tax. So anytime we hear tax, we are our body moves. You understand? We are not. Nobody wants to pay tax. But the truth is that tax is needed for national growth, okay? Because it's one of the major sources of government revenue. And what we are seeing, the infrastructure and all those things like that, is from our taxes that is being used to finance those projects, okay? So what we should be expecting is relief, great relief, especially for the low-income earners and for the poor.
Praise God. Okay, I know you've talked about how important tax is, but um, one of the reasons why a lot of Nigerians don't want to pay tax is because they feel that their money will be wasted. Just in just some seconds or a few minutes, can you help us to have a mentality change as regard the importance of we key into taxation?
Okay, first of all, I will say that there are a lot of benefits paying tax. And one of the major benefits is that when you don't pay tax, you can't receive your tax clearance certificate. And these days now, the tax clearance certificate is needed for a lot of things. You want to travel out, there's some kind of travel package that you want to do, a tax clearance certificate is needed, okay? So also, changing the mentality of Nigeria is that do not, okay, because sometimes we don't see the taxation in the macro level, that is in the household level, okay? Our focus should be looking at what the government is doing. Okay, don't look at it, you are not benefiting from it directly at the meantime, okay? So look at what the government is doing that is benefiting others. Just like in terms of this tax of 18 now, just like some people have not been to general hospital before, okay? And some have not been to public school, but the truth of the matter is that our tax is being used to finance those projects. The public school, the general hospital. So because you are not going to public school, does not mean that your taxes are not used well. So don't look at it. Just face your obligation as a citizen, your responsibility as a citizen to pay tax. So ignore looking at what the government is doing, but at the same time, be sensitive enough or try to see the big picture of what the government is doing regarding our taxes.
Praise God. You know, we used to say in our closing charge that the Eston Church is a nation building and believing church. And if you want to be a practical person that actually believes in Nigeria, we should be involved in tax payments. Don't try to evade tax. Don't try to defraud the government. Even Jesus told Peter, he said, go to the first fish you will catch and pay the tax. They saw the money, got the money from there and paid tax. So it's very, very important for us to, open our minds to and be receptive to taxation in Nigeria. So, sir, do you want to do a presentation or do you want to shed some more light?
Yes, I will share some more light before we go into the presentation.
Okay.
Okay, so for the tax reform is bringing relief to individuals and also to companies, okay? So looking at the current PIT rate now, we have...
Please, not everybody knows PIT.
The personal income tax rate, okay? Looking at the personal income tax rate now, it has favored low-income earners. And also for the CIT, which is the company income tax, the rate has also favored the small businesses. And also, small business has been exempted from WHD, which is the withholding tax, and also for VAT, charging VAT. So they don't charge VAT, and at the same time, you don't charge WHD, that withholding tax.
Sir,
please, can you clap for the government?
Sir.
Okay, so look at the impact of VAT now. Okay. Look at the impact of VAT now. The impact of VAT is that, value added tax. Value added tax. The impact of VAT now is that when the goods get to the final consumer, it comes in form of high price. Are you getting it now? So not charging VAT simply means that what your prices of goods and services will be at the minimal rate. Okay. So that is one of the great significance of that.
Okay, just
for small business.
For practical purpose, if you are selling to your customer at 100 naira, now the government requires you to charge a VAT, that is value added tax, of 7.5%. So you are going to add 7.5% to that 100 naira. That makes it 107 naira 50 kobo that you are now going to charge the customer. Some customers can get discouraged and say they are not going to pay for that. But now the government is taking away that. So it makes our lives better. Okay, sir, you can please go ahead.
So I will also proceed by saying that we should look at the new tax reform as a good thing. But this is one of the best things that the government has done so far. Because looking at before all this reform came into play, Nigeria was almost in a state of collapse. Okay, so the NNPC not remitting to the federal account, and the NNPC also using future crude oil production to finance, as in subsidy and all those things like that. So, but this new reform came in, and all those things has been put to place, has been harmonized. Okay, so let our approach see the big picture of what the reform will be and try to read in depth instead of criticizing without even you looking into it. So that is what I will say. Okay, so let's move to the slide. Now, if you look at this, go back to the second one. There are 4 pictures here. 4 pictures. The first picture there is showing a nonchalant attitude. This person doesn't want to even know anything about tax at all. When you say tax, he does not want to hear at all. So feeling that everything will be normal, government cannot come after him, this and that and that. Okay, so the second person, this one is not nonchalant, but is a bit confused about what the tax is. That is the second person, so a bit confused. And the next one is this person, he has taken it upon himself to study about the new tax law, to study about tax so that he can be tax compliant. And the last person there is showing that this person has fully understood the tax law and is now happy. Okay, so you know what to pay, you know the exemptions that are for you, and you also know your threshold. So that is for the last person. So I believe that after this seminar, we'll all fall in that category of that last person, isn't it? Okay, so moving to the next one now. Let's establish what tax means. So when you talk about tax is not a donation. Okay, it's a compulsory contribution. Very compulsory. It's an obligation, not a donation. So it is something that you are meant to do, and if you don't do it, they will come after you. So it's a compulsory financial contribution levied by a government authority on individuals, businesses. So these individuals and businesses, they are for direct taxes, okay? So tax levied on you directly on your income. So all goods, these are indirect taxes, that is the VAT and so on, and the excise duty, capital, capital gain, then to fund public expenditure. So these your taxes are being used to fund public expenditure and services. So if you look at the last paragraph there, it says that it is not a direct reciprocal benefit to the taxpayer. So which simply means that when you pay tax, you shouldn't be expecting that government should come and do something for you. You understand? So it is not your contribution, your compulsory. It's not a voluntary contribution. It is a compulsory contribution. So looking at the right of, we are going to go through the slide quickly because we have a lot of things to do. So looking at the right of a taxpayer, you have the right to be informed, and this is what we are doing now. So you have the right to be informed. We have the right to be heard. So when you make complaint, you have that right for them to listen to you. So you have the right to confidentiality and also to quality services. You have the right to a tax representative, very important, and also you have the right to know the correct amount of tax to pay. Are you getting it now? So, but these days now, even some people don't know the correct amount of tax to pay. So we're going to look into it. And you also have the right to object and to appeal. That is when you file and they do a reassessment, you have the right to do or to object it. That is the right of a taxpayer. Then we also have, okay, let's move to the next one quickly. The obligations. So you have the obligation. Now we have looked at it, right? Many people now, they value rights more than responsibility. So they run away from responsibility and they run after rights. So when you talk about rights, you should also look at your responsibility. So you have the responsibility to register and obtain a tax ID, that is the tax identification number. You have the right to pay all taxes. They don't say small tax, all taxes that is associated to your business or to your income. Then you have the right to make full and voluntary disclosure. You know, our tax system in Nigeria is that you make a voluntary declaration of your income. Okay? So it is when you make your declaration and the tax authority, the revenue authority now sees that what you make is there is something fishy inside. So they have to reassess you, okay? So you have the obligation to assess yourself to tax once annually under the direct the self-assessment regime, okay? Then also to maintain business record at the same time. You have the right to maintain business record. These days, many businesses don't keep records. Many businesses don't keep records, and that's how they pay taxes that they are not supposed to pay. So we are still going to look into that also. So you have the obligation to be truthful, honest, and act within the law. How many of us are truthful here with your taxes? How many of us are truthful here with your taxes? Okay. So you have the obligation, to be truthful and be honest. So let's quickly run. Now let's ask ourselves these questions. Do you know your correct tax category? Do you know? So ask yourself. Then are you keeping proper records and filing on time? Then also, do you know what exemptions, relief, or threshold applies to you? Have you registered for VAT? Do you know what exemptions or relief your business qualifies for? Okay, this is for business now. That other one is for individual, okay? So are you prepared for tax audits or digital monitoring? Some people are not prepared for tax audit. That's why when they file, when the FRS send them letter, they start running up and down because they're not prepared for it. So, but when you are prepared, even though they send the letter, you can easily object it at a glance. So, very important. So, these questions, ask yourself in there before we move forward. All right. So, the next slide talks about the tax implications for SMEs. Now, for business name, we have in registration, CS registration, we have for business name, and we also have for what? For limited company. So, but today we are going to be majoring on small business, that is the private limited liability company, that is the small businesses. Now, for the business name, the taxes associated with your business is VAT, your WHT, which is the withholding tax, the value added tax, the withholding tax, then payee. This one is for staff. So if you have employees under you, you are meant to enroll those employees under the State Inland Revenue Service, okay? So also the business income is reported on the owner's tax return. So here you are not paying CIT, rather you are doing a direct as a self-assessment on your business income and remit to the appropriate tax authority. Now for the company, the taxes associated with you are the VAT, the WHT, the payee, and also the CIT, company income tax. Now that VAT is payable every month. That is payable on or before the 21st of every month. That is for VAT. Every month you remit it. So if you are not up to the threshold, which is the former law is 25 million, right now it's 50 million. If you are not up to it, you are just filing new returns. You are filing new returns. Although the normal law says that when you are not up to the threshold, you are not even meant to register for VAT at all. Okay, that is the normal law. But when you want to register from the FRS now under the tax promise, they register you for VAT. But when you are being registered for VAT, if you are not up to the threshold, you are meant to file new returns until you are up to the what? The threshold of 50 million according to the new law. So that is for VAT. Same thing WAC, when you deduct tax from anybody that you render service to or that render services to you, you have to remit at the same time. So the payee also pay as you earn. This is on income on individuals, which you are meant to remit before the 10th of every month for the following month. Also CIT is once a year. But right now, the CIT law says that for small businesses, you are not meant to use audited accounts again. Before now, if you are even a small business, you are meant to do what? To file an audited what? Account before you can be able to remit your what? Your company income tax. But these days, this new law now says that if you are a small business, you can just prepare a normal financial statement and for the CIT purposes. Okay? So the next
Auditors will not be happy with you people.
so at the same time we'll be saving our money. Okay. So the tax rate now, look at it for the payee now. The first 800K is charged at 0%. Before now, it is okay. Let me decide this so that you can see the difference and you see the what the government has done. So before now, first 300 is 7%. Then the next 300 on your income is charged at 11%. The next 500 is charged at 15%. The next 500 again is charged at 19%. The next 1.6 is charged at 21%. And the final one, which is above 3.2 million, is charged at 24%. Okay, that is the old PIT rate. Now the new PIT, that one now, you can see the poor now is being, you understand, is paying high. But this one, this time around, the new law has harmonized it and favored the what? The low income earners. Now the first 800 is 0%. The next 2.2 million is 15%. Next 9 million, 18. Next 13, 21. Next 25, 23. Above 50 million, 25. You can see small, low income earners majorly fall between that 800 to 2.2, isn't it? Yeah. So we are going to do the computation today, and you will see the differences. We are going to do the computation. Okay.
So.
800.
Okay, so
what that means?
3 million now. That's 2.2 and 800.
Okay.
They will now do 15%.
This.
Okay,
this
let me explain.
Explain that this is per annum salary. If your
salary, this is
for
salary.
a year,
that is PIT payee. That is for the for salary earners.
Salary earners.
Okay, sorry.
Because we need to know, you need to
Okay.
differentiate their career people and their business people. People who earn salary and people who pay salary.
Okay, so for the payee now is for the career people. Okay, people that earn salary on your salary. So assuming now your annual income is let's say 3 million naira now annually. Okay, so we can see 800,000 from that 3 million, isn't it? Isn't it?
Yes.
That is 0%. Now, can we see 2.2 million from that 3 million? So you charge 15%. Can we see 9 million from that 3 million? No. So the difference between that 3 million and that 2.2 will charge at that 18%. We're going to do the computation so that it's going to be clear, very clear. So that is what it means. So it's not on your list, no. First 800 and so on and so forth. We're going to do the computation. Now, for the CIT, the company income tax, this is for business owners now, majorly the limited liability company, not for business name. So business name, if you have an enterprise registration, you are not meant to file CIT. Okay, so what you are meant to file as a business, as an enterprise, is just your WHT if you have any, then the VAT, value added tax. Also for the payee of your what? Of your employees. And also you yourself as a business owner, you do direct your self-assessment, isn't it? So now for the CIT, small companies, less than 50 million turnover. So in a year, if your turnover, not profit, if your turnover is not up to 50 million, you are meant to file 0%. You are going to file, don't say because this law says if you are not, you are meant to file, but it's at what? 0%. Now, any other income, before now, there are 3 categories of this CIT. The first is 25 million below, okay, which is 0%. The second is 25 to 100 million, which is 20%. And above 100 is 30%. That is before now. But now, they have harmonized it to just become 2 categories, which is a small company, 50 million below, 0%. Any other company that is above 50 million is charged at 30%. Then before now, there's what we call tertiary education fund, police trust fund, and so on and so forth, like that, education fund and so on and so forth. Now it has been harmonized and now put as development levy, which is at 4%. So is it now this 4% they will now use to share in the various what aspects. So let's move on. Entities exempted from CIT. Let's look at the entities that are exempted from paying company income tax. We have the profit of a statutory or registered friendly society. That is a club, a society. You are exempted from filing, from paying, not from filing. So profit of any cooperative society. So any profit that again, in as much that those profits are not from trade. So even though you are an NGO and you are trading, as in you buy something, you resell and you make profit, you are meant to pay tax from those income that you earn. But if your profit that is from those normal subscription, donations, and all those things like that, you are not meant to pay. So that is for NGO and educational. Even in the educational sector, that is educational activities like school. If like in a school now, you are selling textbook and you are making profits, okay, you are meant to file. But just normal tuition fee, you are not meant to file. You are not meant to pay, sorry, the difference between paying and filing. So those are the entities exempted from CIT. Now let's look at the items and services exempted from VAT. This VAT applies to both business name and both limited company. So all medical services, okay, like Pastor now is exempted from paying VAT. So pharmaceutical products are also exempted. Healthcare services for both human, in as much that service is being rendered by a qualified practitioner, qualified health practitioner. So it is exempted. All exported services, so for those of you that are going into exports, everything you are exporting are being exempted from VAT. Educational tuition fee, airline transportation tickets, basic food items, books and educational materials are exempted. Baby products and also fertilizers locally produced. So these are the items exempted from VAT.
Okay, sorry. If we wait till the end of the presentation to take questions, we might have a lot of backlogs that we won't have a part 2. So if you have questions in between, you can take it quickly so that we can move on.
Sorry, I just wanted to point out something from that. Please, can you go back to the other slide where you talked about CIT and PAYE? There's something I just want to mention there. Please go back. The other one, up, where you talked about CIT and PAYE. Okay, media. Okay, so if your company, that thing is said about CIT and PAYE, even if you think you are a small business, but you did not register as a business name, you have a limited by your name, you are still part of the CIT. That's what it means. It means that even if you don't make up to 50 million turnover, as far as that business you are operating with has limited liability at the end, every month you must go and file new returns.
That is
But
very
if
correct.
you registered as business name, meaning that you are the owner of your business is you are also your business. That's when you do direct assessment. So from that explanation he gave, this CIT that is on this side, small companies, whether you make 50, you don't make 50, as far as you registered as limited liability, you cannot sit down and cross your legs. And even if your business does not make up to 50 million, then you receive money in your account like somebody's own. And your money is now more than you are still going to pay because it's
coming to that
now
aspect.
they have your BVN, so they will know that money came into your account.
We are still coming to that aspect, so I'm just trying to go through the slide.
Okay, we have Pastor has a question.
So what she's saying now about even if you are a business, a small business,
Yes.
but you registered as a limited,
liability, yeah.
that you are supposed. But what if the income or the turnover is not up to 50 million?
For CIT,
The person
0%,
won't pay.
Is 0%.
But
So
he must
small
file.
company here is not talking about. He must file. Oh, that's what I'm saying.
But
must
he won't
file.
pay.
It's 0%.
Now, my greatest question now is, this first, General Affairs, they are shouting now.
Okay.
I pray that rapture will happen before that time. but now, are they going to start to...
From 2025 assessment.
Yes.
No.
So it's a new...
Yes.
So all of us should just make corrections.
2026 will be filed in 2027.
Okay.
Single-year basis.
Okay. So all the people who didn't know
So for this
and the
2025,
mistake we have made...
is old law. This 2025 now is still for old law.
Let me go and drink water.
Hallelujah.
Okay.
Okay, I think Pastor Uche has a question.
Yes, thank you, Peter. Please, how does this new tax reform affect the church? Does it have any implication to the church in terms of, or is it exempted?
Okay, for the church generally, church is seen as incorporated trustee NGO, okay? So it's still the same thing. No, you are not paying any income. But if the church has staff, they remit payee. If the pastor receive honorarium, that honorarium is chargeable. Okay? So the honorarium is chargeable in as much that the pastor is different from the church. But if the church also receives income, that is to say, as in the church trade in anything that is buying and selling, okay, and receives profit, is also chargeable. So, but it does not affect the church negatively. Same thing cooperative, they are exempted.
So just to put, when he talked about pastor receiving honorarium, it's regards to pastor's filing, not the church filing on behalf of the pastor. But I also think that one of the benefits now is that if the turnovers for a year, although we are praying that we exceed the 50 million, we would not require the service of an auditor. So we may also want to put that into consideration while we are planning for the year.
Yeah.
Okay, yeah. Let's move ahead so we don't.
Okay.
Let's go.
But sir, you mentioned some specific taxes. Are there any other taxes that, for instance, business premises, development levies for businesses?
Yes, there are business premises levy. That one is just 5,000 annually. Then development that is 100 naira. So that one is not
per staff.
Yes,
100 naira per staff.
Yeah, per staff. Okay, so we have. So please, media move. Allowable deductions. So now in allowable deduction, this thing is something that we should take note of it, because when you are filing and you don't know what to deduct, you pay higher tax. So I want us to really look at this critically, because it's very, very important. So the PIT is for those people earning salary. So look at it now. Now the NHF contribution, that is National Housing Fund, is just 2%, 2.5% on your income. Okay. Now the National Health Insurance Scheme, pension contribution, and all those things like that. Now, I will also advise that if, as an employee here, you are not on any pension scheme, try as much as possible by January 1st, go and enroll make sure that you enroll for pension. That is, pension is 80% in total, 10% from employer, and 8% for employee. But the thing is that most employers these days, they don't want to do that for their staff. And they don't know that they are both helping them, they are helping themselves, and also they are helping the staff. Because those deductions are allowable from your expenses. Are you getting as an employer now? When you pay pension for that's 10% contribution from for your employees, at the end of the day, when you are completing your CIT, the amount you pay will be removed. But if you don't pay any pension,
pay tax on it.
You pay tax on. You understand my point? So it will be high. So why not, as in, you understand, have that pension contribution and help yourself, and also help the employees. Very important. So that pension contribution is very important. If you don't have it, try as much as possible. January 1st, contact Pastor Wole for that. Now, for life annuity at the same time is allowable. So if you don't also, like me, I'm planning for that January 1st now, go and have it. Because for me to reduce my payee, I must add up deductions. Are you getting it now? So that my payee will be small. But if I don't add up those deductions, my payee will be very high. So we're going to look at that computation also. So that is a life assurance now, insurance policy on life. So the premium you pay yearly is being allowed to be removed from your income before calculating the taxable income. Also, interest on loan for developing an owner-occupied residential house. So if you have a house now that belongs to you, and probably you want to develop it and you receive loan for it, the interest you are paying on that loan is allowed to be removed, okay, from your income before knowing what to pay as your payee. Very important.
Maybe I should pause at this point. This interest on loan, for instance, if I want to build my house now, and then I take a loan, will I go and tell my company?
Not build house, develop.
Develop and build house, is it not the same? To build house, my personal house, okay. The interest on it, will I take the interest to my company and say, okay, when you are computing my payee, deduct it from me because
the judgment of that is left for the tax authority to determine. So when they see it and they see that it is reasonable, okay, they allow the deduction.
Okay.
Yes.
Thank
you. Rent relief of 20% before now, there's a CRA, or that's Consolidated Relief Fund, of just 20% on your gross income, but 200,000 is allowed to what? To be deducted, isn't it? Now, but this is backed up by evidence. So you will not be declaring false information and be saying you pay this and you pay that. And if you like, go and tell your landlord to write 1 million on your receipt. Now that one concerns you. So when your landlord comes to you back and tell you that the money you receive in his account is based on what he wrote for you in the receipt, you have yourself to be blamed. So 20% on your annual rent is allowed to be deducted. That is for the PIT computation.
Please, a quick question. So,
Okay. Yeah, go ahead.
a quick question. Can I claim that 20% and my wife still
No.
claim the 20% on the same?
It depends on the person paying it.
So
It's not for both parties.
It's not.
So husband is paying separate, wife is paying separate.
No, if you are the one paying the rent, okay, so it is you
What
that
if
is
you are
allowed to
paying
be.
it from the family account?
Then your family account will pay tax.
Okay, so the question is now, right? I was just asking her if it's a question to ask online. So somebody has a house and is paying, these days the rent is very, very high. You are paying 1.5 million. That's one small, one bedroom or self-contained. And you are doing business outside the place, but you produce whatever you are doing inside the house. Is it safe to make the rent of the house the rent of your business? I'm just saying.
Okay, you are using the space of your.
You're in your house. You are producing akara in your house. But you are selling, yes, at the akara office, and you are selling something outside. To reduce your obligation, is it possible to add the production factory, which is your house, as the rent?
No.
Okay, what you can do is that if you pay that rent from the business account,
So
you pay from the business account and your business address is that address, you can claim
I
it.
think that's the idea we are going. So that you do not pay house rent and pay, you talk, why are you shaking your head? The insurance man is shaking his head. That you can actually pay your house rent from your business account, which helps you reduce your
Yes.
Abi.
Okay,
Yes,
yes, you can actually do that.
paying
You
it
can
from
pay,
your
yes, you
personal
can pay, you can
So,
pay.
sorry,
house
sorry. Why I'm saying that is, if for instance someone is running a limited liability and you are making over 50 million per annum, then you are the person that should even be more careful, because it means that you're going to pay a lot of taxes. So one way to manage your own, because it means that the company is paying you salary. So you take salary from the company is paying you salary every month, but you make the company pay some of your bills. For instance, the rent. If that place is also your business location and it's your business address, and you're paying the rent of that place from business account, and the agreement also states business name, let business pay rent so that your income will not go up to 50 million where you now be paying so much. It will reduce your own personal tax. So it's possible, but all the evidence must show that that place is used for business.
Okay.
All right. So for the CIT, the allowable deductions, we have any sum payable by way of interest on debt employed, okay, in generating the incomes. Then also the rent and premium incurred in respect of land. So if you insure your land, your property, you can also claim that deduction. So salary, wages, remuneration paid to employees, and benefit or allowance provided. This is what I talk about. So when you pay any premium or allowance, you give your allowance to your employees, you are allowed to deduct it during your CIT computation. Also expenses on repair of premises, plant, machinery, or fixtures employed. So you can also deduct that. Also expenditure incurred for establishing or preserving or defending title to rights of an asset. So if you are trying to get a title for your asset, you can also, the expenses incurred on that, you can also allow the deduction. So any contribution to any staff, and also bad debts, you can deduct it, and any expense in terms of research and development for the business. So these days, the tax authority in their new law talks about two things. Before, they used to talk about four things. When your expense is wholly, reasonably, exclusive, or necessary for the business. So when you bring an expense, they check it, is this reasonable for this business? So they will not determine if they will deduct it or not. But these days, the new tax reform has harmonized it and make it very simple for business owner. So in as much as this expense is only and exclusively used for the business, for the cost of generating income, it is allowed to deduct. Okay? So that is for the CIT computation.
One question, sir.
Question two.
All these allowable expenses, are they compulsory? All these NHF? Because it's not every company that does all this.
It's not compulsory. It's not compulsory. So your computation, you can put dash, dash, dash in those columns. So it's not compulsory. But it is advisable you do that.
Can you force
Please,
your company
no,
to pay your...
take questions.
No, you can't force your company. But even according to the Pension Reform Act, when your business is having minimum of 3 staff, you are meant to enroll all your staff for pension. Is it 5 or 3?
4.
Okay.
I think it's 4.
It's
Is it
3.
three?
Yeah, it's 3 because what I saw is 3. So if you're having 3 staff, you must register your staff for under pension scheme.
Whether they are confirmed or not.
Whether they're
Okay,
confirmed or
so
not.
so we have loads of questions. See, we started at we'll close at 12:10 by virtue of where we started. So please, let's keep your questions. Let's see how fast it can go. Because some of the questions you're about to ask will be addressed. And then we can't finish it. Looks like we have a part 2. If we can't finish it. Okay, so let's go, please.
Okay. All right. So talking about tax compliance, it cannot be complete without accurate record keeping. It's very important. You can't comply. You can't say you are a tax. You can't say you are tax compliant without keeping record. Very important. So tax compliance in Nigeria is not just a legal thing. It's a sign of good business practice. Okay. So and in fact, if you failure to even keep record, there are penalties associated with it, which I'm going to look into it also. So records are documented evidence of transactions. Okay, transactions that you do, the sales, purchase, everything like that. You are meant to keep those records, not just because of you are keeping record, but because you don't want to fall into any problem. Also, the tax authority can come, like you fight this year now, and they clear you go next. They can come 6 years back to open up that your returns and say that we discover that this and this and this is not correct, and we are going to reassess you. So if you don't have good record in place, those things, you don't discover that you are just dashing the tax authority money. Okay? So record keeping is very, very, very important. So let's move to the next slide so that we can be fast. So what are without a solid record keeping system, you might file incorrect returns, you may miss deadlines. Okay? So be unable to defend transaction during tax audit and so on and so forth because of time. Then what are the records required in Nigeria? We have your income record. You must keep your income record, which are your sales invoice and your receipt. The bank statement, you must keep them. These days, during audit, you see that some company, they'll be hiding some bank from you. They'll tell you that they only bank with this so and so. And even in one bank, they have like 4 accounts, but they only declare only one. This time around, let me tell you, the new tax law will fish that person out. I'm telling you, there are intelligence and systems that have been put in place to fish out people that are evading tax. Okay, so make sure that you are declaring, be a Christian that you are, and declare whatever thing that you know you want to declare. But at the same time, you have to use wisdom. You have to apply wisdom so that you will not be dashing their money. Okay, so we have the expense record also. Keep your expense record where the purchase receipt and also the statutory tax record. You also need to keep them very well. So let's look at the penalties. The key penalties to note before we move to question and we'll do some calculations. So because these penalties is very, very important. Very, very important because once you know the consequence of an action, it makes you to take refuge, it makes you to sit right and know what to do. So look at the offenses now. Chapter 4 of the Nigeria Tax Act states that failure to register tax, not file this time around, if you do your business registration under CSI, you don't register for tax, you have 50,000 to pay in the first month. Then 25,000 for each subsequent month the thing happened to the date that you went to register it. Are you getting it now? So assuming now that you register your business in August last year. Okay, so August last year to this year is what? How many months? 12 months, right? So 50,000 for the first month, then 11 months, 25,000. So calculate it to know your liability. Now, so the second one is a statutory body or company who awards a contract to an unregistered person shall pay a penalty of 5 million.
No, so
A statutory body. Now, you are registered as a taxpayer and you award a contract to somebody that is not registered. You pay 5 million naira. And that's why the most clients that are coming to us now these days are people that they want to get contracts from somewhere. They are now pressuring you that please do this thing for me. Are you getting it now? Because they need those documents. A company that want to give you a contract will request for your incorporation document, your tax clearance certificate, before they can award you that contract. Okay? So because they know that if they award that contract, they pay you in their account, and when they are remitting, they do their CIT, and when they are coming for audit and they discover that this money went to social person's account, and they trace that person's account and discover that that person is not registered, they will hold you responsible. You pay 5 million naira. Okay, so you have to take note of this penalty. So don't award somebody contract that is not registered, though.
Sir, please, when you are talking about contract, does the amount, does it matter? Because if you want to
Contract is contract.
doing contract of 50,000 naira, the due diligence you need to carry out in before awarding the contract, it can be more than even the cost of the contract.
So you must register as a taxpayer. So it's not irrespective of the amount, even though it's 10,000 naira contract. You must register as you must have an ID, okay, tax ID. So failure or refusal to file returns, or knowingly filing incomplete or inaccurate returns. Maybe your total VAT for the month is, okay, we're still coming to that. Maybe your income is 5 million, you're not declaring 1 million naira. That's incorrect return. So you are going to pay 100,000 naira in the first month, then 50,000 naira for each subsequent month the failure occurs. So if you calculate that, you know that you need to file well. Failure to keep accounts, books, and records of transactions, business transactions, and income to allow for the correct ascertainment of tax. You fail to keep your proper record, your sales invoice. Even your sales invoice these days now, make sure that the numbering is very accurate. Because if they are doing audit and discover what happened to the 002 that is not here, you will explain tire. So if your printer now print your invoice for you, you have to be checking.
Sarah has eaten it.
Okay, so very important. So you have to keep your account very well, your book of accounts, your record, so that you can know the correct. It's not just for the tax authority, but for you also, so that you can know what to pay, the actual amount to pay. So failure to, okay, that is that. So 100,000 in the case of a person, then 50,000 for a company. So company that does not file, that does not keep record, will pay 50,000 naira. Refusal to grant access of the relevant tax authority to deploy technology after 30 days of receipt of notice. These days now, let me tell you, even though you file well, they will still send you letter. Are you getting it now? So in order to run away from those, make sure that you file well. So that when they send you letter, you say you have confidence to reply them. Are you getting it now? So very important. So because they will send you letter and request to provide this, that. Already they even have your information with you, but they are following the law by telling you to provide those things. Okay, they are seeking your consent because they need to notify you. Okay, give you 30 days. Then if you don't report that, they will give you an extension of 14 days. So they know they have those records already, but they want you to provide that. So failure to do that is penalty of 1 million naira for the first day of the default and 10,000 naira for the following month that it occurs. So failure to process a taxable supply through the fiscalization system. So this is invoicing now. If you see what is going online concerning e-invoicing now, you discover that the tax people mean what they are saying. So like the e-invoicing system now, before I can sell to you, I must pass, both the buyer and the seller must pass through FRS and generate an invoice. So automatically they are reading your transaction. They are applying what they need to apply. Even though when you come to file CIT at the end of the year, if you are doing false this, you cannot even do it yourself. Okay? So very important. So failure to process a taxable supply through the fiscalization system, you will pay penalty of 200,000 plus 10% of the tax due. Now, 200,000 you are paying, 10% of that tax you are meant to pay, and interest at the prevailing CBN monetary policy rate. That one is going to be determined by the tax promax. So failure to collect, deduct, or withhold tax shall pay a penalty of 40%. If you fail to collect, you fail to deduct, you fail to withhold tax, you pay 40% of that amount that you did not deduct. Then failure to remit tax withheld by the first day of the month, immediately succeeding the month in which the amount was deducted, collected, and shall pay the amount deducted, collected, or withheld, but not remitted. So we are going to, maybe I will drop this slide so that people can go through it because of our time.
Wow. This is very interesting.
Cuckoo kilos.
But
this penalty, if it's that penalty that we need to drop, we'll drop it so that people can go through it.
But
the penalty
sir, with
very
all these
important to know.
structures, sir, how can the tax authority educate the taxpayers? Because Because
not,
it's quite demanding.
or the tax authorities are doing everything they needed to be done for taxpayers to be educated. Even if you go to FRS office, there's a section for taxpayer. You go there, they lecture you. But the truth of the matter is that most people in those offices are not even educated. They don't know about tax. They don't know about what they train them on the job to do.
They are targets.
Okay, why those questions? I think it's important for us going forward. There's a part you mentioned, but you didn't push it. To say that the government has access to your BVN, one, and they know law has empowered them to know every single thing in all your accounts. So no hiding place.
Yes. So concerning from 2026 January 1st, every taxable person must have a tax ID. Okay, it's very, very important. In fact, I think they will empower the bank to even start generating. Okay, from your NIN, your NIN will be used for it. So it's very important that you have a tax ID from January 2026. And also, there is this part of the law says that end of the month or quarterly, the bank authority, the bank will send your statement to the tax authority for tax deduction, although the percentage has been unknown to us yet. Okay, but if you do a cumulative transaction of 25 million, they will deduct.
I hope people will not revert to cash transactions.
Okay, let's do this. Let's take questions.
Okay.
Let's just take questions. Few questions. Looks like we might have a part 2, so that people can add their mind before we close. Quick ones. No, okay, quick one.
I have a question on what you just said about tax ID. You know, people have been saying it online. From 1st January, if you don't have tax ID, you can't use bank accounts. So I would like you to clarify that. What is the appropriate thing? The second part of this question is for an employee who has been paying tax where they work. When I was working, I was paying my taxes. When I started my business and I wanted to start remitting taxes, they could not find my name, whether wrong spelling or whatever. I had to start afresh. So for somebody who is working somewhere and they're already deducting taxes, what is the next thing to do? Okay. And how do you get your tax ID if you don't have one?
For employee, you are working and you see that in your net pay, your take home.
One house. Your
take home, there are deductions there. So you have the right to find out. In fact, you have a LRS login details. You log in, you go to the section of payments, you see what has been remitted. So most companies, they collect, but they don't remit. That is the thing. So if you on your LRS portal, you can't find any tax remitted, that means those people are not remitting. That is just the truth. Because there's no way they will be remitting that it will not reflect in your this thing.
Okay, quick one.
But I think one thing that employees usually make mistake about is not doing their own personal filing. Because at the end of the year, you are also required to do your own personal filing, which I do for myself. And there you will see all the remittances that the company has done for you. And if you do not see it, then you can raise eyebrow. Your tax ID is very easy.
Yes, how do you get tax ID? You can get it through LRS. That is for people staying in Lagos. You can also do JTB, that is John Tice Board. But if you're in Lagos, do State Inland Revenue, that is the LRS. You register it under it. You can ask anyone, you can do it yourself, or you can meet a tax consultant to do it for you. So you get the ID. So anywhere you go to work, you just show them your tax ID. They put it under the payroll, and when they are remitting, the thing goes directly to your account.
I think I'll drop the link on the Friends Connect Rate session.
Okay, their tax ID. Just meet a tax consultant. Simple. If you want to retrieve it, meet a tax consultant.
You can retrieve your tax ID because as at the point of you registering, you provide your email and your phone number. So you log in and you click forget password. Just put your BVN.
If you click, some people, the email they use or the phone number they use is different. It's totally different. So because this year in the company I work, I wanted to register some new staff. So when I was trying to register them fresh, the thing said that they have been registered already. Existing users. So we have to troubleshoot and start doing a lot of things for us to get that payer ID. They don't even have it. So for them to get that. So either you get it through a tax consultant or you meet the LRS office to do it for you. So you can retrieve your ID in as much as you have registered for tax.
All right. Thank you so much. Wow. My friend is so loaded, and I didn't know. All right. My question one. In the business registration, can I change my company address from registration?
Yes, you can change.
Okay. And two, what happened to many of us that we have registered, do a business in more than 5 business and all that they are in limbo? Is there any...
Your neighbor, what do you say?
is on limbo, as in inactive and all that.
Okay. Okay.
Other people can ask questions.
So,
One minute.
You mean the business has been suspended? Okay.
No activity. No activity.
Are you trading within the? Are you trading? So you have to pay the penalty. The tax authority will look at it that you are using your personal account to receive funds for your business account. So in as much that you are carrying out business without your business name, even though you don't have a bank account in that name, okay? So they will see that there's a place your money is going to, you are receiving funds for that account, so you pay penalty. But
Okay.
if you want to know more about it, you let me know.
Come for further consultation.
Even these days now, if you want to open a bank account, they will not just ask for your TIN, they will ask you tax promas. Are you getting it now? So your TIN must be registered on tax promas before they can. That came from 2019 according to the Finance Act that was amended. So but before that is less than 2019. If you don't register your business, you just have that is the CAC generating for you. You can just take that thing to register and they open. But these days now, if that thing is not activated on tax promas, they will not open the account. And for your thing to be activated on tax promas simply means you have been enrolled for e-filing. Are you getting that? So when you are enrolled for e-filing and you are not going back to that thing to file, your penalty will just be accumulating for you till the days you will need it. You will go back to that thing and you see your liability.
All right, thank you so much, Peter. I think you should throw more light on small companies, like small companies less than 50 million turnover and 100 million turnover, because, you know, if you're a small company, you don't file for CIT at the end of the financial year. And from the look of things, it's seeming like we have more of
You don't
small...
pay, not file.
You don't pay. We have more of smaller companies here. So what do they do at the end of the financial year apart from CIT? So speak on that so that people will have an idea of what to do to
small
avoid...
company, is it for business name or for limited company?
For business names.
Okay, so for business name, what you just do, first of all, every month is VAT. Then if you have any withholding, maybe somebody render service to you and you deduct at source, you remit also. Then at the end of the year, you yourself, you do self-assessments. That is all. So those are the things that are applicable for business name. But for people that are running limited company, that is the VAT, the withholding tax as well, and the CIT. So that CIT, at the end of the year, you bring out your financial statements, you start computing and to get your taxable income. But if you're not up to the threshold, you pay 0%. That's for limited liability, small companies. Okay, so I will advise every business owner here to have a tax person, like a tax representative. In fact, it's even part of this thing, the changes. So you are entitled to have a tax representative because the truth is, it's just like you having a lawyer, okay? A lawyer that defends you in the court of law, okay, if there's any issue. So it's very necessary as a business owner to have a tax guardian, a tax representative guiding you in every of your operation, because come 2026, it's not going to be just easy. You are not going to be evading tax. So it's important that, first of all, you have a tax consultant, and also you keep your records were. It's very important. So this is not as business as usual again. Very, very important for you to keep your records and also have a tax representative guiding you